Monday morning, folks, and welcome to a brand new episode of FINMET Mondays. Last week was really an action packed week, and to decipher it, we have with us Mr. Sunil Kashyap. Sunil, a very warm welcome to you on the podcast. It's great to have you here. Let's deep dive straight into what happened from a technical perspective and really try and understand what that double digit gain on Friday looked like and what was that all about. We saw about a $40 increase on US spot gold, taking the metal right from 2040s to 2080s, around that level, right? And this entire range that we're talking about was the largest single day gain we had seen up till since October. And that is right here. So, what really happened? And to help understand that, I looked into the 30-minute charts, breaking this down further. On the 30-minute charts, you can see that on at 8:30, around this time, this green candlestick chart here is right where you saw a really big increase in the metals price action, right? And 8:30 coincidentally was also the release of the ISM manufacturing PMI on Friday. The ISM manufacturing PMI is just a measure of manufacturing activity, and that surprised to the downside. It said that activity has contracted in the US compared to what the expectations were. And that, in addition to the PC index or the inflation data that came out on Thursday, both were big contributing factors. I think what happened also was it took a little bit of time for the markets to really digest the inflation data. At the start of the week, everyone was very dollar bullish, but pendulum has swung slightly as the week progressed, especially as the inflation data came out. And that kind of led the really big increase in the metal. Right? Now, looking forward, I don't think these price increases are sustainable. We are already at 2086, and it's very unlikely we are going to create new highs. What I would say from a positioning standpoint, take a short position somewhere around here, expect a red candle on Monday or on Tuesday that is at least half of the body that we have here of the green candlestick. That's where I would probably put the entry. I would probably put the stop somewhere back near that same resistance of 2086. And I would put the target for the short position somewhere on the 2054 pivot, because that's where the first correction is likely to stop, beyond which data would probably guide the further action. So the view for next week would definitely be that we are going to see a pullback. These are very attractive levels for a lot of short-term players to get out. And post that, we're probably going to see a rise back again or a further correction back to 2001, depending on the data that will come out. And talking about the data, we have a very important indicator, which is the non-farm payrolls coming this Friday. This would be really significant given the context of everything that's happened last week with the inflation data moderating. Everyone wants to know how the US labor market is performing as well. I know, Sunil, you had pointed out something very interesting on the ETF markets. Can you share some commentary about that as well?
There's two pieces of information that I'd like to share. One is that the overall ETF holdings have been reducing over the last month or so. So the market, especially the retail investors, seem to be bearish on gold. The level of the ETF holdings now are as low as they were last in 2019, in October 2019. So almost 5-year low right now in ETF holdings. And also, if you look at the futures positions, the retail investors seem to be net short. And I think these two factors of people being bearish on gold, going into that data that you mentioned, meant that when the data was positive for gold, suddenly there was short covering, and that's why you suddenly saw this huge increase in gold prices. And you're right, next week we should see that resistance being hit and prices coming off.
Well, thanks, Sunil. Thanks for giving us your insights as well. Let's see how the markets play out. Till then, thank you so much and goodbye.